Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. Take a look at what's going on in the financial markets. Hope you all had a great weekend. Quick reminder, everything we do is for informational and educational purposes only. It is not intended as investment advice. I'm just sharing with you some of my thoughts about the market as I watch things roll in. So it's moving the market. Super microcomputer shares jumped 20%. Their admission into the S&P 500 was the big catalyst. So I thought that was kind of an interesting choice, pretty volatile stock. Ford sales jumped 10.5%. Apparently a lot of jumping going on out there, mostly attributed to their EV sales. So good on them. SpaceX has 2,850 pre-orders for a, yes, ladies and gentlemen, flying car. We are living in the era of the Jetsons. 10-year Treasury pretty steady at 4.227, kind of wedged in between 4 and 4.5%. And oil's moved up a bit, almost to $80 a barrel, which has been expected now for some time. What are we watching this week? Today, we got Philadelphia Fed President Tom Harker. He'll be chatting. Boy, the Fed members love to be in front of the press. Tuesday, ISM services number comes out. Wednesday, we get the ADP employment number. That's kind of important. And then Jerome Powell will be in front of Congress. We got the job openings number. They're expecting it to be 8.9 million. Last month, it was 9 million. Anybody who wants a job today can get it. I always have to giggle when I just can't find work. How is it I've been able to find work ever since I was 15? Other people don't ever seem to be able to find work. I know some of you got pissed off at that. That's just my read on it. Others of you get exactly what I'm talking about. I'm not suggesting you can go get the job of your dreams, but there's work out there. The ability to pay a few bills, no excuse not to at least do that. Thursday, initial jobless claims number comes out. That's a biggie. We're expecting it to be 218,000. Last time around, 215,000. And we have the good chairman, Powell. He'll be in front of Congress again. And then on Friday, U.S. unemployment rate should hold pretty steady at 3.7%. And hourly wages expected to go up 0.2%. So that's definitely down from where it was. Last week's heat map, Meta crushed it. Microsoft, great week. NVIDIA, another 7%. Broadcom, on the heels of NVIDIA, another 7%. So you can see the winners versus losers. Apple down 3.7%, Alphabet almost 3%, Pfizer, United Healthcare, both of those down pretty big. 1 year heat map, oh, there's been so much money to be made. Amazon up almost 100%, Alphabet, 45%, Meta 185, Lilly 150, NVIDIA 263, Broadcom 134. Boy, I hope you're getting your share. It has been and will continue to be a stock picker's market. Market's great if you know where to go. Market breadth for last week. I always like to look at new highs versus new lows. Last week, it was amazing. 524 new highs compared to 80 new lows. That's on the New York Stock Exchange. On the NASDAQ, 671. Highs, 259 lows. We're in a bullish market, my friends. So finding returns for the week and year to date. So equal weight. We were up 1.2% for the week, 3.9% for the year. The momentum stocks, those ones you pick out on a chart, up 3.2% for the week, 21% year to date. I mean, we just started March. We've already had 2 years of return in the momentum stock so far this year. Growth up 13.6%, quality 11.2%. The low volatility, the defensive shares are not doing anything. Well, that's relative. Relative to momentum and growth and high quality, they're not doing anything. Still up 4.4%. Dividend growth 4.8%. High dividend yield 3.4%. Never buy a stock just for its dividend. And value oriented 2.5%. Biggest winners, NetApp, Cooper Companies, Western Digital, Broadcom, Dexcom, AMD, KLA, Micron Technologies, Lam Research. I put in a whole entertainment center, the big screen and the surround sound from one trade on Lam Research a few years ago. All right, it's all about earnings. You know, when you get the Fed out of the way, then it becomes all about earnings, and we're expecting earnings to rise 9.8% for the fourth quarter of last year, and revenue up 3.7%. Future earnings estimates, those have been surging, moving higher. It's a good thing. Future GDP estimates, moving higher. There was the December Fed pivot when Powell came out and said, hey, next year we're going to have 3 rate cuts. Markets have moved higher. Magnificent 7. Sales growth at 12%. The S&P, sales growth of 5%. The other 493, sales growth of 3%. So why are the Magnificent 7 charging forward? Well, it's simple. They got all the growth. That's why. Weekly funds flows, look at small cap. So I've been telling you about this. In an election year, small cap outpaces large cap, and that's where the money is headed. We've also got a massive reduction in holding periods. Now the average investor holds a stock 5 months. It used to be, on average, they held them for 8 years. Not anymore. It's about getting in and out and making money in spurts. Construction spending, look at that, declined 0.2%. And Fed probabilities. So there's now a 97% chance no rate cut in March. Take that off the table. 74% probability no rate cut in May. But there is a 67% probability we'll see a rate cut in June. I got it at 50-50. And it looks almost certain we'll have a rate cut by July. So that's where we sit. Earnings announcements, whole lot of retail. You know, just kind of scanning this. Target, Ross. I've heard rumor, do people really try on clothes at Ross and throw the clothes on the ground? Does that really happen? And other people pick the clothes off the ground and try it on? I mean, I guess that's not the worst thing in the world, right? Maybe it's the 5-second rule. I don't know, but it just seems stunning to walk into a store and there's stuff on the ground and people are trying it on. But, you know, I guess they try on stuff other people have tried on. I don't know. It just feels weird to me. That's my problem. Victoria's Secret, Big Lots, Kroger, Costco. It is all about retail. We'll see what the retailers think about the behavior of the consumer. 1-year returns, sector by sector, tech has reclaimed the lead. So for the last 12 months, of 56.57%, followed by communications, discretionary at 30%, industrials, they were at 20%, kind of took a step back after last week. Healthcare, 13.2, financials, 12.2, materials, staples, REITs, I got two of them here. So this should be healthcare, then REITs, and utilities, the only losers. All right, let's take a look at the charts. What are they saying to us? Hope all of you had a splendid week. Let's look at the SPX, which is the S&P 500. Isn't that a beautiful chart? Look at that 50-day moving average sloping up. We are above the 50-day solidly. We're in a bullish market. How about the Qs? This is big tech, gorgeous. More volatility. And how about IWM, the Russell 2000? This is your small cap. Look at that, starting to take off. There you go. Up so far today. All right. Well, great being back with you. Have a fantastic rest of the week. We will see you next week. Market looks like it's in pretty darn good shape. All right. Bye for now.